Imagine a world where people gamble everything they have, every penny, every asset, their homes, and even their future on something as fragile as a flower. A flower that doesn't promise to nourish the world, but rather only to decay. Now imagine this flower. Its value skyrocketing so high that it seems like the only way for society to survive is to get in on the action before it collapses. Sounds impossible, right? Too wild to be real? Well, let me tell you, this is exactly what happened in the 1600s. And the result was the world's first stock market crash. This was Tulip Mania, fevered obsession with tulips that led to the most devastating financial collapse the world had ever seen. What started as an innocent interest in beautiful flowers would soon turn into one of the most disastrous speculative bubbles in history. A tale of human greed, desperation, and the dark truth behind how easily people can be swayed by irrational exuberance. In the early 1600s, the Dutch Republic was a force to be reckoned with. It was the hub of global trade, with ships constantly bringing treasures and goods from all corners of the world. The Dutch were innovative, wealthy, forward-thinking. They thought they had discovered something even more powerful than money itself: status. It wasn't long before tulips, those beautiful yet simple flowers, became the symbol of that status. But these weren't just any tulips. We're talking about rare, exotic varieties with stunning, vibrant colors and patterns. These tulips became objects of desire. In fact, they became so desirable that they weren't just bought and sold for their beauty. They were bought and sold for their perceived worth. The tulip market soon became a frenzy. Traders, merchants, even farmers who barely had 2 pennies to rub together were betting everything they had on the tulip bulbs. The more unique the bulb, the more people were willing to pay. A single tulip bulb could fetch more than the price of a house in Amsterdam. Yes, you heard that. Right, a single bulb could buy a luxury home. But here's where the story takes a dark turn. Because despite the insane rise in prices, the tulips weren't actually worth anything. They didn't feed anyone. They didn't provide any lasting value. The entire market was based on speculation, and the idea that the price of these flowers would keep rising, without anyone ever truly considering their intrinsic value. Now, I want you to understand something. This wasn't just a little bit of gambling. This was a full-blown mania, driven by the fear of missing out. People weren't buying tulips because they loved them, they were buying them because everyone else was. And they were convinced that if they didn't act quickly, they'd miss out on the next big thing, the next great fortune. Why didn't someone stop them? Well, that's exactly the point. When money starts pouring in, and everyone around you is making a killing, it's hard to stop and ask, wait a minute, what's really going on here? So the market for tulips kept growing, and as it did, the prices kept rising until it reached insane levels. Tulip bulbs were no longer just a commodity, they were a currency, a symbol of wealth and status. But here's the thing, this was a bubble, and all bubbles burst. In February 1637, the unthinkable happened. The bubble burst. But how did it happen? It wasn't just a single event. It wasn't just one investor's failure to meet a contract. There was several factors coming together that caused the market to implode. People had been trading tulips on futures contracts, agreeing to pay for tulips at a later date. They were borrowing money to buy tulips, inflating the market even further. And then, out of nowhere, the first cracks appeared. One day, a group of traders failed to make good on their futures contracts. The market started to panic. Tulip prices began to drop not by a little, but by a lot. And when prices dropped, more people started selling to cut their losses, driving prices down even further. It wasn't just a crash, it was a meltdown. People who had bought tulips at prices that had once seemed reasonable were suddenly staring at massive losses. Their tulips were now worth nothing. For some, it wasn't just about money, it was about their entire future. The crash wiped out families, ruined careers, and left people wondering how they had fallen for such an irrational investment. The aftermath of the crash was devastating. But here's the strange thing, the Dutch economy didn't collapse. While the tulip market had been huge, it was still a small part of the overall economy. The financial damage was mostly contained to the people who had speculated in the tulip market. But the psychological impact was profound. See, the Dutch people were left questioning the sanity of markets, the dangers of unregulated speculation, and just how easily the human mind can be swayed by the promise of easy money. For many, Tulip Mania was a wake-up call. But for others, it was a bitter lesson that would be forgotten till the next market crash. The dark truth behind the first stock market crash is this. It was just about tulips. It wasn't even just about money. It was about human nature, about how easy it is for people to lose sight of reality when greed takes over. The lesson here is simple, yet profound. When people are driven by fear and greed, they make decisions that defy logic. Tulips, something as simple and natural as a flower, became a symbol of the dangers of speculation. And it wasn't just about a financial loss, it was about trust. People had trusted a market that was built on nothing but hope and speculation. What happened in 1637 was the first major financial bubble, but it would not be the last. In fact, history has repeated itself in countless ways. We've seen similar bubbles in the South Sea bubble, the dot-com bubble, the housing crisis of 2008, and the crypto boom of today. The question we must ask ourselves is, are we repeating history? Are we setting ourselves up for the next big crash, just like the Dutch did with tulips? Look at today's stock markets, cryptocurrency, and even the housing market. The parallels are there. Once again, people are speculating, buying assets with little understanding of their real value. The same forces that drove Tulip Mania are at play today. Fear of missing out, greed, and a desire for quick riches. And here's the scariest part. History repeats itself. Just like the Dutch who thought tulips would make them rich, people today think that their investments are safe, that they can make money without really understanding the risks. But the truth is, there is always risk. And when people ignore that, they set themselves up for another crash. So what is the dark truth behind all of this? It's that the greatest costs of speculation aren't just financial. The emotional toll is just as real. The devastation that comes when the bubble bursts is more than just money lost. Lives turned upside down. Families shattered. Dreams destroyed. People humiliated by the crash they didn't see coming. This is what happened in 1637, and it's a lesson we must never forget. If you've stuck with me until the end, I want you to leave a $sign in the comments below. It's a sign that you understand the dangers of speculation. And you're ready to think twice before diving into any market, whether it's tulips, stocks, or anything else. Don't forget to subscribe and hit the bell icon, as you won't want to miss the next video where we explore the dark side of modern finance and how greed continues to shape our world. And if you found this video eye-opening, check out our next one about the South Sea bubble, where another massive financial crash nearly destroyed the entire British economy. Thanks for watching, and I'll see you soon.